Hello and welcome to Wyckoff Training Academy. In this session, I'm going to explain the version 185, Quadris WTA Wyckoff all-in-one version 185. So please just give me a minute. So in the previous video, I've explained about this range and everything. The price came in. So I'll go back to gold. From here onwards, I would be sharing. I use Onda for my reference. So I'll hide all the things. And today I'm going to explain about what is all-in-one Wyckoff version 185. So the main premise of this indicator is simple and straightforward. This is the default setting which you have to apply. Now, I have version 185, 174 and 178 added into it. So first thing I will explain version 174 and what version 178 is. Buy sell zone version 174 and buy big trade Forex version 178. It is simple and straightforward. Nothing complicated is there in it. Only thing you have to do is the buy sell zone will plot zones accordingly, like in the way of this yellow line. What you have to do is like if price goes above this yellow zone, that means it is a buy zone, or we will only look out for buy. If price is going below the this lower yellow line, we only have to look out for sell zone or sell. This would be a sell zone. Sell, this would be only sell zone, and we only want to look into sell orders, and above this we only want to look into buy orders. Simple and straightforward. And it comes with different things, like for example, short-term levels and long-term levels. If you plot and if you apply long-term, short-term levels, you would get more frequent trades based on this one. So you can plan your trades if you want to use buy and sell zone version 174. Then you have to use for like if price is has broken down and it is testing this level, then we get a sell candle over here. Then you would go for a sell order, and if it is coming above and testing it, and then we get a green candle, then we would go for a buy order. Simple and straightforward. So it acts as a dynamic support resistance level, wherein you get support key levels, wherein you can plan your trade around. And one more thing, whenever the price is in between this zone, the upper yellow zone and lower yellow zone, price is not to be traded. This is all about version 174. Now, version 178, I'll hide the version 174. What this, how this has to be traded. It is something wherein it is called as brick trade forex version 178. You're able to see. So we were talking about version 178. That is this cascading line. So you can see if price is below this one, we would look for sell opportunity. If price is above this line, we would look for buy opportunities. The way to trade based on this particular, the main purpose of this introducing this indicator, big trade forex is like I want many people has come to me like and we want an indicator wherein we want less and less signal but greater profit potential. So this is something wherein you can get greater good risk to reward or greater profit potential. Once the price breaks out of this particular level, you look for a first testing or like first pullback and then right if price goes below this particular line and then if there is a test and it is the pearl this particular line should be red, and if it is red and price is coming back and testing it, as soon as the red candle forms you can place your stop loss above and you can short sell it. You have to open a short sell order. So this is how this has to be traded. Simple and straightforward, no complications, nothing at all. Only thing, all my indicators are all based on pullbacks. Simple and straightforward. Look for the test, look for the first pullback. We only trade first pullback. We don't trade second, third, and fourth pullback, and we write the trade accordingly. But if you once you are using these things, these tools, and based on your experience, you can go for second, third, and fourth pullback also, depending upon your experience with these tools. Because my simple rule is straightforward. I only look for first pullback either ways. Now, the pullback would be a deeper penetration, a pullback could be a touch and go either ways. So I like to see touch and go either on both the side. I don't consider things wherein price is penetrating and going violation, though this has greater potential because it shows us that there was a liquidity hand, or you can say stop loss hunt taking place over here, and this negates the price is going to go downwards, and that's the reason price started moving upwards. So I apply version 155 along with this one to understand what has happened over here. Was it a rejection or stop loss hunt, or was it a false breakdown or breakout? So this is how you have to trade. It is simple, crystal clear. When it comes to version 174, only look for buying opportunities and selling opportunities above or below the upper line and lower line. Whatever comes above upper line would be a buy zone. This would be defined as a buy zone. Whatever price would, if it comes and if it forms and if it breaks down and then goes downward, this would be entire area would be sell zone for us. And we would only look for sell opportunities and buy opportunities on the first pullback. That's it. And same goes with this big trade forex. So now, as I have explained version 174 and 178, now I will only explain the main purpose of like the main intention behind creating this indicator is to identify accumulation and distribution. So please pay close attention to what I'm about to say. We have three options. One is wide price pullback, one is low volume pullback, one is high volume pullback, and one is normal pullback. So why I prefer my most preferred way is to use I use high volume pullback because this is first thing first. This is a ribbon. The purpose of this ribbon is to act as a dynamic trend line. If we draw a manual trend line, or if we draw a manual support resistance, sorry, or anything, this is static in nature. This is dynamic. The main purpose of using this thing is to get the trend line, or this is a ribbon to get this show us a dynamic trend line. So when we are talking about dynamic trend line, it will keep on evolving as the price action moves. So unlike any other moving averages, because we have only graphical representation for this one in this form, that is, you can say plotting is always done in terms of like you can see moving averages or ribbons or um, like when it comes to dynamic indicators, these are not static. Static indicators would give you this kind of lines, but dynamic indicators would give you this kind of slopy lines. So are we trading based on any moving average? First question. Are we trading based on any Ichimoku, Bollinger Band kind of thing? No, not at all. The main purpose of this ribbon, this version 185, the main intention of this version in 185 is to get the high and low volume and normal pullbacks to be plotted, so that we should be in a position to understand if price is going to go downwards, or the price has exhausted and the demand has kicked in, and now the price is going to go in upward direction. So that is the main purpose of this. So if I apply, I'll go one by one. If I apply normal pullback, so first thing first, if there is a red ribbon, that signifies downtrend. When there is green ribbon, when the color of the ribbon is green, that signifies uptrend. When there is if the color of the ribbon is yellow, that means it is a sideways trend, or there has there is accumulation and distribution undergoing, or we are going into a phase of accumulation or distribution, or you can say sideways. Okay, that should be SW. So please remember this fact. If price is below this level, red, whenever the ribbon of the color of the ribbon is red, that means price is going in a downtrend, or prices are going to go downwards or going downwards. Whenever the color of the ribbon is green, prices are going upwards, that is in an uptrend. Or if the color of the ribbon is yellow, that means we are going sideways, or like to us being a Wyckoff trader, any accumulation or distribution or reaccumulation or redistribution is underway. So on this premise, if I apply price pullback, this is normal price pullback. Whenever the price is going down, we have a pullback. Then 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 some degree of downward movement, then pullback. Then downward, then upward pullback, and so on. You can see in terms of wave, we are facing shortening of thrust, and as well as we are seeing increment in prices uh, reacting in an upward way, uh, and we can see that this what is about to come would be either accumulation or redistribution if it has to prove itself. So this is, and when it comes to like if price is going upwards, like we would focus on this one, the recent price action. This is XAUSD chart in live market. This is an up move. Then whenever there is a red line, you can see on green line, it is suggesting that price are pulling back. So this was an upward move, then a pullback, and then upward move, then pullback, and now this portion is not clear for us whether this would be a pullback or whether this would be a continuation of price towards upward side. So having said that, this is a normal pullback which you can see. Like for example, this was an up move. That's the reason we have starting of green. Like this was a green, like this was a pullback in terms of selling or in terms of downtrend. And you can see we got first one and this. So this entire price movement is suggesting that price is going upwards. And then we have seen prices coming back. So as I mentioned earlier, the main purpose of this ribbon is to use it in context of identifying pullbacks, nothing else. This is not, though there are many students who you like to use it as a pullback tool, but it has greater potential in either ways. If you look for a pullback, again, my first rule would apply. We only look for first pullback. If my first pullback is intact, if I get a trade after first pullback, I initiate a trade. I don't look for second or third or fourth pullback, because the logical reason behind first pullback is like we there are greater chances of for me of making any profitable getting or making any profit when it comes to first pullback rather than on second and third. So this was a normal pullback. Now I would apply low volume pullback. So now the low volume pullback is normally used by traders, used by my students for getting trend continuation trades. So again, what I would suggest you if you're playing with this tool, first thing, let the downtrend be decided. Let's first there would be a down move. Then if you're considering a low volume pullback and whatever your trigger bar is, like in this particular case, if this is a down move, you got this low volume pullback. Then if there is a continuation over here, your place stop loss would be here. You're short selling in this particular position. So always look for first pullback. Don't look for second or third pullback. It doesn't mean that there are at times your first pullback would be stopped out, and then in the second pullback, your market would go up 1,000 point in your favor or in the trade, or which you have missed, or in a downward direction. So make a rule for yourself, play around with it. I'm a subjective and discretionary trader, so I like to give options to my students. I don't make any rigid rules. That's the reason my system works, and that's the reason Wyckoff worked for me, and it will work for you as well. So this is the first low volume pullback, second low volume pullback, first, second, and third. Now here, this was not triggered. This was the first volume pullback, but we haven't got any breakout of this particular volume candle. Here we got a breakout, a breakdown of this particular candle at this particular point. We got breakout if we consider this candle to be a pullback or either this candle to be a pullback. Then again we got a pull breakdown of this particular level. So this is how we have to be. You have to trade, or either if you are not trading this one, then you should apply 155. It gives you an entry on a early in an early fashion. Like for example, we know there is a trend change or price continuation happen taking place. We got a selling supply greater than demand kind of candle. If we hover over this one, it is stating a supply which is greater than demand. So you can open a short selling trade over here with a stop above. So this is how it has to be traded. And everything has to be synced in. So and collaborated in a such a way that you get a good trading opportunity. So this is how low volume pullback would work. Now, for example, many people ask me, what about this one? What about this one? So what I normally do is I plot my support resistance with the help of this particular high and low volume. I normally prefer to plot my support and resistance based on the price action which has resulted or which has stalled in terms of volume, either high or low. So once I get a swing high with the help of volume, I plot a resistance. And whatever the low volume pullback or high volume pullback is lower than this previous pivot point or the high which we or a swing high which I got previously. If they are greater, then I would discontinue this line and I would plot a new line. If they are lower than previous swing high, then I would not draw a new line from here. I would extend this particular line because all this price action is lower than this particular point. So what does that mean? This is something wherein the smart money has put in efforts to bring the market down, or at least to stall the market, and we are getting the same price reaction whenever we are approaching this one. So this is the logic which we have to sit with. After that, if I'm plotting any support, like I plotted the resistance. Now I haven't got any support from this particular point because there is no whatsoever green. Though if I see, I can plot this particular line because here I haven't got any green line, or you can say green line on red ribbon. So I would not consider this as to be support, but rather this has to be support. Though given the fact is we have started, if we see this was the support, as I clearly mentioned, whenever there is a support, if this is broken, then I would plot this as to be support, which is corresponding to this one. So this way I plot the structure. So it is very easy and very uh, because many a times what happens, people come up with extreme ends and they plot the structure. The problem with that one is like we can plot the structure, everyone is seeing it. but many a times your structure is not respected. It happens when you try to apply um, automatic indicators like many people have come up with market structure kind of tools wherein they automatically plot support resistance, like breakout levels and everything. But many a times what happens, let's give it a try to identify the way I am doing. You would be blown away with the fact that market respects and market will give you a greater opportunity of trading. Like for example, if here, I'm not getting any support. I got this support from this particular price movement. This is my swing, and here I got the extreme end support. But price haven't reached, or price haven't like did not come to this particular level. But instead of that, I got a level over here. So now, as I don't have any level, if I make a secondary level, now you would say you're not. I'm not making any secondary level over here. Look at the distance, because there is a huge pivot, or you can say swing distance. I'm talking about swing points. If this swing, whatever swings here are forming, they are lower than the previous swing. But here you can see we have a greater degree of price progression, and we are not getting any, what you can say, pullbacks. So in that case, I can draw a secondary swing, a secondary support over here. This would be my primary support or major support, and this would be my secondary support. And this secondary support I'm drawing, like for example, this is a secondary support, and again we have a continuation of this particular level. So this is subjective, and this is related to this particular previous level. Again, we haven't got any like there was price sideways, price going up move and going up and sideways, and then up going up and then sideways, some degree of downward movement, some degree of upward movement, and back and forth, back and forth. So that makes us very clear that this is something wherein like accumulation or distribution or reaccumulation or redistribution is taking place. So this makes me it makes things is now going into sideways movement, and there has to be a range which has formed from this particular point and which is respected. So this is the top. Again, we have a breakout and then a testing of the top. Now the question arises, as per my explanation, if price is coming back, what I'm looking out for is price to touch this particular level and then bounce back. But many a times it doesn't happen like that. Many a times I had seen price is not kissing this particular level, or either touching this level and it is going above and going thousands and other hundred of points. So you have, as I mentioned, this is subjective tools, and discretionary trading is important to it. So you can make your rule. Either you can go for a touch, or either like you can keep a fixed point pullback, zoom or pullback buffer area. You can say, like, give or take 10 points or 10 pips above, like 10 points, 10 points or 10 points above, 10 points below, 10 points above, 10 points below. So you can come up with those kind of solutions for you. And now after that, if I apply high volume to it, now things will change. One second, let me delete the indicator. Let me delete this one. If I apply, this is a high volume pullback. Again, I would apply my resistance from this particular point. And after that, you can see every time I see a high volume pullback, as we are here, it is a high volume pullback. As I am approaching in this particular level, there is a high volume pullback. One student asked me, can we draw a zone around this particular line? If you like I mentioned earlier, this is all subjective and discretionary trading. Play and you should follow the basic rule that what I am teaching you. Apart from that, based on your observation, you can do whatever you want, or you can add whatever like trade engagement rules which you want, or till the time you're not playing around, or till the time you're not going against the basic analysis which I normally taught you. So I'm fine. I don't have any issues with that one. The main objective of all these tools is to make you a profitable trader in a longer run. So you can see as we are approaching this area, we are seeing price is bouncing back. And it is a tendency of price whenever it approaches the levels which I have drawn, or whenever I draw the levels, price has a tendency to pierce through, or either it will stall at this particular level and go sideways. So in that particular case, if we are extending from this particular line, you can see we got another high volume pullback at this particular level. So either way, it is up to you. You can consider this one to be your swing or either this one to be a swing. But I rather prefer, because price downward initiation has started from this particular point. So low not from this particular point, but the high volume was applied on this particular price. So that's the reason price came up to this particular level and started sinking. So in this particular case, like for example, price has started from this particular point. So if you draw towards this particular line, you can see price is getting rejected, and you see effort versus result kind of situation in this particular point. So follow along. This is the indicator explanation video. So the main application, I would be recording videos for everybody. It would be for general public, so that they can at least have an understanding of a tool available in the market, which is based on Wyckoff principle of demand and supply. I am only using the basic principle of demand and supply, and effort versus result, and three laws: cause and effect, effort versus result, and demand and supply. This is the core premise of all the tools which I developed so far. So thanks for watching this video. Watch this video again and again for my student and for general audience and general traders, so that they can have understanding of tools which are at your disposal. And in my later on session, I will try to explain all how to apply in more detail about this indicator, because I don't want to make a video for like 1 hour, 2 hour in one sitting, and nobody is reviewing it and people are getting bored due to the duration. So I want to make short videos like 15, 20 minutes max, or at max 30 minutes, so that people can watch the video attentively and get some insight out of it. So like before I end, this is a high volume pullback which I've applied and which I normally apply. And I also use high volume for trend continuation kind of trades. This is a support resistance kind of thing for which I've drawn based on this one. Like for example here, and this is my major support from this particular price level, and price had gone breached this level, and then we got a V-shaped correction, and after that we have beginning of an up move of some degree, though we have another kind of sideways movement, which we can say uh, distribution or reaccumulation taking place over here. So this is it. And if you have any questions, please ask me questions, because I don't believe in a monologue. I believe in people going through the videos and asking the questions, so that I'll be in a position to answer and address the issues faced by various traders from across the globe. Thanks a lot for watching this video. And this was version 185 in its entirety. And please watch the video again and again. And it works on every time frame, from 1 minute from 1 minute to daily, or to weekly or monthly even. Like for example, if I come to a monthly analysis, you can see price went into an reaccumulation phase. Now you would say, what is the reaccumulation area? Then what is this one? So it is quite self-explanatory. We have a breakout, a breakdown. Again, we have some sort of distribution. Then we are bottoming of formation is taking place. And if this is in this particular indicator, it adds more weightage to it. Like, okay, here is the point wherein I can expect a trade, because this is the top price. If price is touching this top, then I would see I could go for a reaction trade. And if not, price is breaking out and then testing it and then going upwards. So in many cases, all my levels, like many people ask me, are your levels of, are your the levels which you are plotting, are there like authentic levels? The yardstick, or you can say the scale, or I would say the yardstick for identifying any level if it is of importance or not when it comes to smart money or composite operator study based on Wyckoff is like if that level, whenever price is approaching that level, it will either go in a sideways movement or either it will pierce through it. Same goes with when the price is coming down, either it will go sideways or either it will pierce through it. This gives us an understanding. This shows us that this level was authentic and there was smart money interest hidden back in these particular areas. So thanks a lot for watching this video. And if you have any questions, you can ask. Bye bye.